Zimbabwe has faced significant challenges, leading to its reputation as one of the poorest performing economies worldwide. Throughout the years, various elements from political unrest to financial mismanagement have contributed to this serious predicament. Zimbabwe's economic downfall is a complex tale encompassing hyperinflation, land reforms, corruption, infrastructure shortcomings, and various other factors. Let's look into the intricate web of Zimbabwe's economic challenges, uncovering the many factors contributing to its current situation. During the early 2000s, Zimbabwe went through one of the most severe instances of hyperinflation in modern history. Once upon a time, the government printed money excessively to fund budget deficits. This decision made prices soar high, and the local currency lost value. During hyperinflation, people's buying ability decreased, their savings disappeared, and investors lost faith. In Zimbabwe, specific policies like land reforms and taking commercial farms from white farmers without compensation caused disruptions in agricultural production, which was crucial for the country's economy. As a result, agricultural output sharply decreased, leading to food shortages and declining export earnings. Moreover, economic mismanagement was worsened by corruption, cronyism, and a lack of transparency in government. And during the reign of former President Robert Mugabe, political turmoil and oppressive governments played a significant role in Zimbabwe's economic struggles. Foreign investment was deterred, and economic development was hampered due to repression of political dissent, human rights abuses, and disregard for the rule of law. Amidst the turmoil and unpredictability, investors hesitated, and business confidence wavered, ultimately hampering economic growth. Over time, Zimbabwe's infrastructure has suffered from neglect and lack of investment, leading to the deterioration of roads, railways, energy and water supply systems. Poor infrastructure hampers economic activity, drives production costs, and weakens competitiveness. Power shortages and unreliable utilities can wrench industrial production and business operations. There was a time when Zimbabwe grappled with a mounting external debt burden. This predicament was fueled by fiscal deficits, borrowing to sustain government expenditures, and failing to meet debt repayment deadlines. Excessive debt levels can restrict fiscal flexibility, hinder access to global funding, and raise the expenses of repaying debts, which can shift resources from crucial public services and development initiatives. When hyperinflation made the local currency obsolete in Zimbabwe, the US dollar took over as the main currency. However, shortages of foreign currency, especially the US dollar, have caused challenges in trade and investment. Import restrictions, exchange rate controls, and a flourishing parallel market for foreign exchanges have worsened the situation, resulting in shortages, stockpiling, and price imbalances. Zimbabwe's industrial capacity has been dramatically affected by the collapse of the manufacturing sector, which can be attributed to power shortages, outdated machinery, and a challenging business environment. Once upon a time, many factories shut down, causing job losses, decreased production, and dependence on imported goods. Industrial output has declined, impacting export competitiveness and worsening trade imbalances. Recurring humanitarian crises have plagued Zimbabwe, with issues like food insecurity, malnutrition, and disease outbreaks worsened by economic collapse, climate-related shocks, and government mismanagement. Many vulnerable populations are facing challenges meeting their basic needs due to high levels of poverty, unemployment, and inequality, which have also worsened social tensions and instability. In Zimbabwe, the economy's vulnerability to external shocks and fluctuations in commodity prices is heightened due to its heavy dependence on a few critical sectors, like agriculture and mining. Expanding into more lucrative industries and services is crucial for fostering lasting economic growth and resilience. In Zimbabwe, businesses, tiny and medium-sized enterprises, encounter challenges when trying to secure credit from financial institutions. Banks often need help to lend to businesses due to high interest rates, strict collateral requirements, and concerns about risks in an unstable economy. The limited access to finance hampers investment, entrepreneurship, and business expansion, ultimately impeding economic growth and job creation. In Zimbabwe, there has been a notable exodus of skilled professionals, such as doctors, nurses, engineers, and academics, all in pursuit of better prospects overseas. When human capital is lost, the country loses the skills, expertise, and innovation necessary for economic progress. The brain drain worsens labor shortages, diminishes public services, and hampers the development of a knowledge-based economy. Zimbabwe's economy is primarily shaped by the informal sector, playing a significant role in economic activity and employment. Many Zimbabweans live in the informal economy, which functions independently from formal regulations, tax systems, and labor laws. Being too casual affects productivity, tax collection, and regulatory enforcement, making it harder for the economy to formalize, attract investment, and generate revenue for the government. In Zimbabwe, corruption weaves its way through society, chipping away public trust, weakening institutions, and skewing economic motivations. When political elites, bureaucrats, and business interests engage in rent-seeking behavior, resources are diverted from productive investments, competition is stifled, and the rule of law is undermined. Corruption is like a dark cloud that scares local and international investors away, disrupts economic progress, and keeps the cycle of poverty and inequality going. Zimbabwe's economy heavily depends on imported goods and services to meet local demand and sustain economic operations. Yet, the ongoing foreign currency shortages, trade restrictions, and supply chain disruptions continue to hinder the importation of crucial goods like fuel, food, pharmaceuticals, and machinery. Depending heavily on imports can leave the economy vulnerable to external shocks, price fluctuations, and uncertainties in global markets, which can worsen inflation and economic instability. Zimbabwe faces many challenges due to climate change, such as unpredictable rainfall, droughts, floods, and cyclones. These factors endanger agriculture, water sources, and food stability. When climate-related disasters strike, they wreak havoc on crops, livestock, infrastructure, and livelihoods. This results in significant agricultural losses, displacement of communities, and the onset of humanitarian crises. Depending heavily on imports leaves the economy vulnerable to external shocks, price fluctuations, and global market uncertainties, worsening inflation and economic instability. Zimbabwe faces challenges from climate change, dealing with unpredictable rainfall, droughts, floods, and cyclones that threaten agriculture, water sources, and food security. Climate-related disasters wreak havoc on crops, livestock, infrastructure, and livelihoods, causing agricultural losses, displacement, and humanitarian emergencies. Investing in climate-resilient infrastructure, sustainable agricultural practices, and disaster preparedness measures is crucial for adapting to climate change, reducing risks, and enhancing resilience. In Zimbabwe, public institutions face capacity, efficiency, and transparency challenges, impacting governance, service delivery, and economic management. Dealing with bureaucratic inefficiencies, red tape, and administrative hurdles can be frustrating. These obstacles discourage investment and lead to delays in project implementation and higher transaction costs for businesses. Enhancing government accountability and economic performance requires strengthening institutional capacity through public administration, procurement, and regulatory framework reforms. In Zimbabwe, there has been times of political turmoil marked by disputed elections, violations of human rights, and harsh government actions against opposition. Political uncertainty can shake investor confidence, discourage foreign investment, and lead to capital flight. Businesses face a challenging operating environment in a world of political tensions and governance issues. This situation worsens economic volatility, making long-term planning and investment difficult. In the early 2000s, Zimbabwe implemented land reform policies that resulted in the widespread expropriation of commercial farmland from white farmers without providing adequate compensation. The agricultural sector faced challenges as the land redistribution program caused disruptions in production, decreased productivity, and shook investor confidence. Land tenure insecurity, lack of access to finance, and insufficient support for new farmers have all decreased agricultural output, leading to food insecurity and rural poverty. Zimbabwe's turbulent economic history has been marked by currency instability and hyperinflation, worsened by poor fiscal management, monetary policy difficulties, and external disruptions. Once upon a time, the country faced numerous currency crises, which eventually caused the Zimbabwean dollar to crumble. As a result, the nation embraced various foreign currencies, such as the US dollar and the South African rand. Yet, the economy's dependence on foreign currencies has left it vulnerable to external shocks, fluctuations in exchange rates, and liquidity limitations, hindering economic stability and investment. Zimbabwe's economy has become a cautionary tale, illustrating the dangers of political instability, economic mismanagement, and social unrest. For many years, the country has struggled with hyperinflation, agricultural collapse, infrastructure decay, and widespread poverty due to poor governance, misguided policies, and external pressures. To change this downward trajectory, we need bold reforms, transparent governance, and united efforts to tackle the root causes of Zimbabwe's economic challenges. On the challenging journey to recovery, the Zimbabwean people's resilience and ingenuity shine brightly, painting a hopeful picture of a future where the country regains its position as a symbol of prosperity and opportunity in Africa.